Time now for the final Traders Unplugged of 2012. Ready to rumble from the floor of the CME Group, Knuckman and Andrew Keene. And we are looking forward to your parting shots of the year. Good to have you on the show. Round number one, hero or zero. Apple stock is down 25% plus from its $700 top. What's the best way to bite that apple?
Apple's going lower next year, and I can give you a handful of reasons why it's going lower. You want these reasons? A, they're cannibalizing their own product. Every person that buys an iPad mini takes away 25% from the tablet market.
The question was, where do you buy Apple? If you don't want to buy it here, where do you buy it?
380, the opening print of 2012.
So you're waiting for it to go down to 380?
Yes.
Okay, a more conservative play than missing out on the whole game is to go into the Qs. The Qs are trading right now at 64, and Apple makes up about 10% of the Qs valuation. So if you can lean on 62, which is the halfway level, you got to understand.
What's the catalyst, though, to
the
make Apple
technology shares are still
the
above
out,
the halfway.
The tablet's out. The TV's not coming out to the end of
There's
next year.
something new coming. There's always something new coming.
In a year. They're not going to have a new product for a whole year.
Round number two, lay off the stocks. Can layoff king companies benefit from cost cutting? We've had a lot of them. Bank of America with 30,000 planned layoffs. You've got HPQ with 29,000. Even the U.S. government with 31,000 jobs lost. What's going on here? And which stocks do you buy? Does it help?
Good.
Well, Andrew's philosophy is, and I'm going to speak for him, that he thinks that it's a cost-cutting measure and it's good for the stock.
Of course. Anytime you cut costs, you cut jobs, the stock goes up. Look at Bank of America. The second they cut costs, JCPenney,
yeah,
that's going to zero.
Exactly. So that's not going to help their game.
They have a bad business model. That's why that's going to help their game.
I believe that's going to help one stock, Hewlett-Packard. It's a stock that's
long
been forgotten about, and put it in the category.
Put that in the basket with Dell,
RIM,
JCPenney,
put it in the basket
all
with
going to
RIM
zero next year.
and Yahoo, which have had big jumps. It has value. It's a name. It just needs to reinvent itself. It's going to reinvent itself.
What's their product they sell?
Round number three, the fiscal fiasco. Is this fiscal cliff a real issue for the market January 1st?
No. The answer is no. The market doesn't care. This is the most widely talked about.
Why is the VIX over 20 then?
Financial event in the history of the world.
20?
It was 28 in May. We're nowhere near these relative highs of this year.
It's been in months.
We've seen a little bit. It's down 70% on the year. Nobody cares. The market will move on. The market right now is still up 13% on the year. So smoke on that.
It is up 13% this year. But
no
we
more
do
questions.
have problems.
Oh, no more questions.
Downgrades of the U.S. debt. Not being able to pay.
Action.
What happens when you can't pay your debt?
Look at the board. What does the board tell you? Price action has been positive.
Up there, actually.
Positive.
I see a lot of red.
Let's move on to the bonus round. Now name the fake option strategy terms.
Alan will not get this. I got 100 says Alan doesn't get this.
All right, here we go. Straddle, strangle, collar, or leash.
Leash is fake. It's not my first
Alan
day.
actually knew this.
There's 21 basic option strategies.
This isn't his first rodeo. Leash is the correct answer.
Short leash is exactly where I like to keep you guys. Thanks for being on the show.